Hello dear friends, today is Friday, December 27. Let's look at the charts for the euro and the pound sterling and try to make some predictions. As we can see, the European currency remained range-bound. Yesterday, despite some sell signals, bears failed to take over the market, especially ahead of today's US labor market data. In the first half of the previous trading day, the euro was supported by upbeat data from Germany. German industrial production rose by 1.5% in November, beating economists' forecast for a 0.5% increase and reversing declines in October and September. The British pound saw a major sell-off amid a light macroeconomic calendar, but then pared back some of its losses. Although the US market was closed yesterday, traders digested speeches by a number of Fed officials. Federal Reserve Governor Michelle Bowman said that she does not see the need for further rate cuts, as there are still upside risks for inflation. She noted that the December reduction should be the final step in the easing process and that the next policy move will depend on income and data. These, in turn, reinforced investors' expectations that the Federal Reserve will not resume monetary easing until this summer. Philadelphia Federal Reserve President Patrick Harker echoed Bowman's sentiments, saying that getting inflation back to the central bank's 2% target would take longer than expected, and that the Fed should take a pause amid inflationary uncertainty. Now let's take a look at today's macroeconomic calendar. All eyes will be on US non-farm payrolls data. In November, the indicator rebounded sharply after October's weak reading. In December, US non-farm payrolls are forecast to rise by only 164,000. If the number beats the consensus estimate, the dollar will likely gain value against the euro and the British pound. The United States is also set to release unemployment data. The US unemployment rate is expected to remain unchanged at 4.2%. A decline in the rate will increase expectations that the Fed will keep interest rates steady, which could support the greenback. Traders may also take notice of data on French industrial production and Italian retail sales. However, these reports are unlikely to have a major impact on market sentiment. The focus of investors will be on U.S. labor market statistics. Furthermore, it is worth paying attention to the University of Michigan's readings on consumer sentiment, inflation expectations, and current conditions. From a technical perspective, the EUR USD chart shows that the 1.0285 level acts as support. In case of a false breakout at this mark, the euro is likely to rise to 1.0319 as part of a bullish correction but remain range-bound. If the price breaks through and consolidates about this level on the back of weak US data, the volume of long positions will increase, with the European currency climbing to 1.0356 and probably 0.397. At this level, I recommend going short on the rebound in anticipation of a 2025 pip move. Short positions at 1.0319 and 0.356 can be considered on the false breakout. Alternatively, the price falls below 0.285, the market will most likely to see a major sell-off, with the euro-dollar pair sliding to 1.0257 and even 0.228. A one-year low. At this mark, it would be wise to go long on a rebound to catch an intraday correction of 25-30 pips. Going long at 1.0257 will only be relevant on the false breakout. Speaking of the British pound, it continues to lose value. Today, however, bears may loosen their grip ahead of important US data. A false breakout at the support level of 1.2277 will generate a buy signal, with sterling relying to 1.2313. If the price breaks above these marks amid downbeat statistics from the US, the pound-dollar pair is likely to extend gains to 1.2344 and even 23.76. At this level, traders are advised to go short on the rebound, expecting a move of 25-30 pips. Short positions at 1.2344 and 23.13 can only be opened at the false breakout. In a bear case scenario, the price may break through and fix below 22.77. Short interest will increase, with the British currency diving to 1.2239. Strong US non-farm payrolls data will pave the way for further losses, dragging sterling down to 1.2190 and even 21.57. At these levels, I recommend going long on a rebound, counting on an intraday correction of 35-40 pips. Long positions at 1.2277 and 22.39 can be considered on the false breakout. Good luck to all. Have a nice weekend.